How to Profit from Stock Option Trades, by www.forexconspiracyreport.com. How to profit from stock option trades is to develop, improve, and trade with an options strategy. It is common to see the expression options strategy bandied about on the internet. But, what is a stock option strategy? It is a defined method of approaching options, analyzing options and their underlying equities, and buying or selling both puts and calls. How to profit from stock option trades is to be prepared going in. It is like the professional athlete who seems to have best eye for hitting a fastball. More often than not, he has studied the opposing pitcher and has a good idea of just what pitch he will throw in a given situation. Hitting home runs in options trading, like in baseball, comes from being prepared. How to profit from stock options is akin to how to become a successful stock trader. The trader will need to decide on an investment time horizon, short, medium, or long term. Then he will need to learn to do fundamental analysis of stocks and technical analysis of stock price movement. He will need to decide about how much he wants to invest in options trading. He will also want to decide if he is buying calls on a stock in order to buy low and keep in a diversified portfolio? Or will he execute the call if the stock goes up in price and then see at the stop price for a short-term profit? How to profit from stock option trades is to decide on selling or buying options. Over the long term, successful option writers tend to make more money than option buyers. The risk in writing, or selling, options is that there is always the risk of a large move in stock price, which can be very damaging to the seller of an option, as he is obliged to sell in a put or call contract. The buyer, on the other hand, only exercises the options contract when doing so is profitable. In this sense, buying puts and calls on stock is like buying an insurance policy. The trader will always pay the premium for the option contract. If his prediction is correct and the stock price moves as anticipated, he profits, minus the premium, fees, and commissions. If the stock price moves contrary to expectations, he is only poorer by the price of the premium. Technical analysis is important in how to profit from stock options, as analysis of market sentiment picks up where fundamental analysis leaves off. It is the tool of day traders and of long-term investors interested in getting the best price in buying or selling stock. It works as well for the options trader interested in whether to hold on to an options contract or exit it for a short-term profit. The point here is that a trader need not execute an options contract to profit. Traders will simply execute the opposite trade to exit their position. The trader pays a premium and receives a higher price back if the option increases in value. In simply trading the options contract, the trader never needs to come up with the money to buy stock, even if he intends on selling immediately. Using the leverage that the situation offers is typically how to profit from stock option trades. For more insights and useful information regarding stock, options, commodities, and futures trading, visit www.forexconspiracyreport.com.